Hi, let's talk about how businesses record income and expenses because the accounting method you choose affects everything: your taxes, your financial reports, and how lenders or investors view you. There are three main accounting methods you'll hear about: cash basis, accrual basis, and tax basis. The first one you hear about is the cash basis accounting. That's money in, money out. Cash basis is the simplest. You record income when the cash actually hits your account and expenses when you actually pay them. If you send an invoice today but don't get paid until next month, that income doesn't count until the money arrives. Same goes for bills. No expense until cash leaves your hands. This is best for small businesses, freelancers, and service providers with low inventory. The pros is it's easy, clear, good for tracking cash flow. Cons is it doesn't show the full financial picture if you have outstanding invoices or bills. Next you hear about accrual basis accounting. That's matching revenue and expenses. Accrual accounting recognizes income when it's earned and expenses when they're incurred, regardless of when cash moves. So let's say you invoice a client today, that's revenue today, even if payment comes later. You receive a bill this month, but pay next month, it's still an expense this month. This is best for large private companies, any business seeking investors or loans, and public companies, since GAAP requires it. Pros of this is matches revenue and expenses in the same period, gives a truer long-term view of profitability. The cons is it's more complex, may require accounting software and professional help. Finally, we have tax basis accounting. Tax basis is often a hybrid between cash and accrual. It follows IRS tax rules, not GAAP rules. For example, you might use cash basis for income and expenses, but you still need accrual adjustments for things like depreciation, inventory, or accounts receivable. This is best for small to mid-sized private businesses focused mainly on tax reporting rather than financial statement presentation. The pros of this is that it keeps taxes simple, aligns with IRS compliance. The cons are its financial statements under tax basis may differ from what banks or investors expect. Now here's where it gets important. Public companies must follow GAAP, which means accrual basis only. Private companies can choose, but once you grow, you want loans, investors, or sell your business, accrual becomes essential. Smaller businesses often start on cash or tax basis because it's easier, then transition to accrual once they scale. So here are the key takeaways. For the cash basis, it's simple, great for small operations, usually just for one set of books that doubles as both financial and tax records. Accrual basis, that's required for GAAP and used by larger private or public companies that keep two sets of books, one for financial reporting, one for taxes. And then we have tax basis. That's the IRS-friendly hybrid focused on compliance, often used by small to mid-sized private businesses that don't need full GAAP reporting. So if you're small and not seeking investors, cash or tax basis works fine. But if you plan to grow, attract investors, or go public, accrual is the language of serious business.